Let me ask you something. Have you ever entered a trade and immediately regretted it? Maybe you saw an opportunity, caught in, and then thought, why did I do that? Or perhaps you have been sitting on the sidelines watching the price move closer and closer to your target, but felt too afraid to pull the trigger. It's that simple. It is that feeling of hesitation or second guessing yourself. On the other hand, you might have experienced some wins, feeling confident only to give it all back in one emotional mistake that wiped out your gains. Sounds familiar? You are not alone in these struggles. Almost every trader has faced moments like this. Research shows that around 90% of traders fail at some point. The main reason isn't because they can't read charts or don't understand markets. It is because their mind works against them. Their emotions, beliefs, and reactions sabotage their efforts. They get anxious, greedy, or impatient, and these feelings cloud their judgment. That's why understanding trading psychology is just as important as knowing how to analyze charts or big strategies. Success in trading isn't just about numbers, it's about mastering your mind to stay disciplined, focused, and calm no matter what the market throws at you. Let's get real about what trading really involves. Many people think that finding the perfect strategy will guarantee success. They chase the next shiny indicator, the hottest trend, or the latest system, hoping it will solve all their problems. But the truth, strategies don't fail on their own. Traders do. The best systems are useless if traders can't use them properly. Every good system works in the right hands. The key is consistency. Only traders with disciplined minds can stick to their plan, accept losses, and avoid impulsive decisions. Time and time again, I've seen traders blow their accounts over small mistakes. Overtrading becomes a trap. Chasing price moves out of hope or greed leads to bad entries. Moving stop losses, trying to save a losing trade often make things worse. It's not about the trade itself, it's about how traders react emotionally. Without discipline, even the strongest strategy fails. Now, trading isn't just about logic, it's about managing emotions. When you take a loss, fear can grip your heart. Thoughts start racing, doubts creep in. You may avoid trading altogether or try to make it back, which often leads to even bigger losses. When you win a big trade, greed takes over. You think this is easy and start risking more than you should. These emotions these emotional highs and lows form a vicious cycle. Many traders get caught in this roller coaster, trading, draining their accounts without even realizing it. The real secret to successful traders don't let emotions control their actions. They understand that trading isn't about one perfect trade. It's about playing the long game. They trust their process, stay calm through losses and profits, and keep their risk in check. They approach trading like a business, not gambling. But how do you break free from this cycle? How do you start thinking like the big players, the smart money? The answer lies in shifting your mindset. Retail traders tend to react emotionally. They buy when everyone is buying, they sell when fear spreads. Smart money, on the other hand, manipulates markets and takes calculated actions. To succeed, you need to stop reacting to every market move. Instead, learn to spot where liquidity pools form, large orders that create moves or reversals. These are the setups where institutions step in, and understanding their patterns gives you an edge. But just recognizing these setups isn't enough. You need the mindset to execute on them without hesitation, having the confidence to follow your plan. Even when everyone else is panicking, is what separates successful traders from the rest. Finally, discipline plays a huge role. Discipline isn't just about sticking to a plan, it's about creating consistent habits. Every winning trader has a clear set of rules that they follow religiously. This includes managing risk with tight stop loss orders, avoiding overtrading, keeping a trading journal to learn from mistakes. They maintain mental clarity through routine mental exercises or mindfulness. They commit to continuous improvement, tracking performance, and adjusting strategies. Success in trading isn't accidental. It comes from acting like a business with proper procedures and routines. No shortcuts, no emotional reactions, just steady, deliberate actions based on facts and discipline. That's how real winners are made. You have heard all this before, but maybe you still feel stuck. You keep making the same mistakes. It's frustrating trying to figure out why your trades fail, why your confidence keeps dropping. You might be thinking, I need help, but don't know where to turn. The truth is, you can keep struggling alone, hoping you will figure it out someday. Or you can fast track your trading journey by working with someone who's been through it all, someone who understands the mental game in detail. I've been there myself. I learned the hard lessons. Now I want to help others avoid those pitfalls. That's why I'm opening a mentorship program designed specifically for traders who are serious about leveling up their psychology, execution, and strategy. This isn't just theory, it's practical, proven advice based on real world experience. I'll guide you through the mental frameworks that top traders use to stay calm, focused, and consistent. You will learn how to eliminate bad habits that keep holding you back. We'll work on building a disciplined mindset that allows you to follow your plan, re- regardless of market noise or emotional urges. I'll help you develop a natural confidence in your decisions so trading becomes less stressful and more predictable. With my mentorship, you will finally understand why some traders succeed while most fail. You will gain clarity on your approach, develop better habits, and start making progress faster.